Hi guys, welcome back to the channel. Today we're going to talk about QQQ. That is the Invesco NASDAQ 100 ETF. And obviously ticker symbol QQQ. Now, what does that cover? Invesco QQQ is an exchange-traded fund based on the NASDAQ 100 index. The fund will, under most circumstances, consist of all stocks in the index. The index includes 100 of the largest domestic and international non-financial companies listed on the NASDAQ stock exchange based on market capitalization. The fund and the index are rebalanced quarterly and in some cases annually. So if we think about what the NASDAQ is famous for, you guys, mostly it's technology. Now, it's not only technology, but this is more of a growth-oriented fund. So this is not going to be a huge dividend payer. If we look at some of the fund information, it has a 30-day SEC yield of 0.57%. So it gives you a little over 0.5% in dividends. Currently, it has 103 holdings. The total expense ratio of this fund is 0.20%, so 20 basis points. So certainly within the realm of a not hugely expensive fund. Not as cheap as some of the others, but certainly not terribly expensive. Currently, it has a PB ratio of 17.56 and a PE ratio combined of 47.48. And the weighted market capitalization of this is about $786 billion. If we take a look at the 10 largest holdings, we see that number one is Apple, and Apple makes up about 13.39%. Microsoft makes up 10.75%. Amazon about 10.66%. Facebook A shares make up 4.26%. Tesla makes up about 3.45%. So those of you who aren't Tesla stock, but you're not getting it right now in the S&P 500, this is a way to get that. Alphabet A and C shares, both at about 3 and a little under 3.5% each. Nvidia makes up 2.88%. Adobe Systems makes up a little over 2%, and number 10 is PayPal at just under 2% of the holdings. So you can see that the 10 biggest holdings comprise a very large sector of this fund. Now, as we can see by geographic allocation, this is primarily in the United States, you guys. In fact, over 97% of the fund is in the United States. It does have a little bit in China and a little bit in Europe, as well as some in Argentina. If we look at the sector breakdowns, we see that the biggest sector by far is information technology, you guys, at over 48%. Next is communications at 19.14%. Consumer discretionary at 18.93%. Healthcare is about 6.67%. Consumer staples makes up just 4.67%. Industrials are about 1.75%. And lastly, utilities makes up a little over 0.5%. So if we look at the growth of $10,000, now this is looking back, and obviously you guys, past performance does not automatically dictate future performance. So know that. We only know what happened in the past. We can't say what's going to happen in the future. But looking at this, we can see that if you had put $10,000 in September of 2010, you'd be up over almost $63,000, you guys. And the NASDAQ index is about 64,200. The Russell 3000, which is a total stock market index, you see, is only at about 35,426. So in the last 10 years, you would have outperformed, you would have almost doubled what the total stock market is. You can't use that for future reference, right? You know that. So it's good to think about that in context. But if somebody is into, and you may have an S&P 500 fund, and you may want to have a little bit more of a tilt towards growth stocks or information technology or technology stocks. And this is certainly an easy way for a pretty low cost. By buying QQQ, you could have the 100 largest companies listed on the NASDAQ exchange. Remember, those are non-financial companies. Certainly an easy way to get a lot of growth stocks and information technology stocks all in one fund. A nice basket, low cost. All right, you guys, hope you got something out of this. If you did, do me a favor, drop me a like If you're not already subscribed, you know the deal. Hit the red button, ring the bell. You get notified every time I make a new video. Try to make at least a couple a week. All right, thanks a lot. We'll see you.